Hey, this is Jim Damschroder of Portfolio ThinkTank, and today I'm going to walk you through some ideas for Trump stocks for 2025 and maybe deeper into his administration. So we've got a lot of clues so far. It's day one of Trump's presidency. So we know some stuff that worked during his first term. We know what he talks about, and we know what the market action has told us in the time span of almost 2 months now between his election and his inauguration. So we know an awful lot, and we got everything I think we need to construct a portfolio. I've assembled over the last couple of months a bunch of Trump stocks, and here they are in this Google sheet called Trump Ideas. We can see that they fall into about three major themes. Theme one is policies. Theme two is Trumponomics. I'll circle back on that. And then theme three is what I call Trumpy. That's just sort of, Trump being Trump and more like personality related matters and such. You can see for yourself what that stuff is. Of course, you'll get a deeper chance once we get this thing constructed to be able to dive into any of this stuff. These assets, by the way, haven't been tightly curated. They're not really screened for fundamentals. I've only screened out a few things basically for tradability. So yeah, I'll be able to basically trade any of this stuff with a market order. I'm not necessarily recommending any of it. I just think that collectively, this is the kind of stuff that should do well in a Trump presidency. And we ought to be able to put that to a test, especially looking at the last 2 or 3 months performance, see if it has indeed outperformed in that span. And otherwise see, if it is a decent portfolio, if you're taking, too much risk, et cetera, et cetera. I will go ahead and take a minute here to walk you through a little bit more of the stuff that's inside here. I don't want to get into it particularly at a ticker by ticker level, although you can see I'm being perfectly clear with what stuff I am putting in there. I'll just tell you why this stuff is in there. So starting with the policies. You've heard drill, 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 right? And in his first presidency, we had energy independence. It's a big policy matter for him to keep us there or get us back there. I'm not sure if we've tipped over to be a net importer. But in any case, he's going to want to drill. So that's not necessarily great for oil prices. So you got to be a little bit judicious about where inside the oil sectors you pick. I don't think the integrateds are really the play, although they dominate the cap space. I think you want the wildcatters. If you can get a decent price and a lot of incentives to drill, go get the ones that are actually doing the drilling. The next block there is entrepreneurial starters. So I think a lot of people are going to be out of work over the next couple of years due to AI, due to getting fired from the government and the DOGE, Department of Government Efficiency. A lot of those people probably should be fired, but what are they going to do? If employment's a little bit tight now, but there's definitely some signs of weakness, I think a lot of people are going to try to start businesses. These are a couple ideas for people start a business. A lot of times they might end up working with a company like this. Benefits from privatization. Gosh, who wants to get in the mail anymore, right? Okay, trucking. So what if oil prices stay relatively low? Well, trucking and airliners stand to benefit about the most out of anybody. We were talking about the airlines and the trucking companies. They should have a pretty good margin expansion. With margin expansion alone is really what I think can move the stocks. So the last policy level thing is sort of the made in America / protected industries. Yeah, I got steel in there, the top end AI chips, Dell computers, Intel. I think someone could come up with a better list than this, but I think those give some good coverage to that kind of space. Let me try to speed through the rest of this stuff up. Trump is the developer, right? So he wants cheap money, and come hell or high water, he's going to do his best to make that happen. That's good for home builders, okay? It's pretty good it's definitely good for investment banks in particular. There's going to be a lot of wheeling and dealing. I don't think we're going to see the Department of Justice blocking any mergers for the next 4 years. Also, God help him if he can get some serious deregulation and we could expand the pool of stocks in this country from being just so top heavy. Small cap stocks, it really could be time for small cap stocks, and there's definitely been a good bit of market support for that we've seen, like today, yesterday, generally speaking, since the election. Okay, credit surfaces, same thing, cheap money should be a good space. And then maybe unwinding some of these, Biden policies for, debt forgiveness forever. I think that's holding some companies like Sophie back. I might be mistaken, but it's worth a play. Let's see what the market thinks. When we cook up these strategies, we're going to put all of this together and optimize it. So, and usually what I do when we do this is we'll put some momentum signals in there. I never like to tell the market what to do. I'm going to give it a bunch of ideas. I'll let the market kind of tell me what it is in agreement with me on. So I've got reason for doing it and extra validation and support. And then the way that fits together into the portfolio should, if we do it right, give some additive juice in the form of some alphas. So we'll see how that cooks up here in a bit. Okay, attended inauguration. At first I wasn't so sure about these mega cap companies because it seemed like some of them were kind of antagonistic to him during his first term, censoring, etc. But I'm sensing that the leaders of those companies have kissed the ring. They're big campaign contributors. They were there at the inauguration. They're in the same row with Trump family members. I'm guessing that the rift has been mended, which is great for investors because those stocks have been driving the U.S. economy. So if that can continue to happen, going into the next 4 years of a Trump administration, keep kind of that mega cap tech and that international technology leadership position, I think it's good for America, and I think it's good for your wallet. All right, big campaign contributors. I found a site on this. I think it was called like Secret Money or something, but it was tracking all this. By the way, it's crazy how many private companies are amongst the biggest donors. But in terms of public companies, these are some of the big ones. A couple other ones are also splashed in here, but I didn't need to duplicate anything. All right, the third section, Trumpy stuff. Okay, now I know he just came out with this coin. I think that thing is toxic and dangerous. Sure, some people are going to make some money on it, but it is dangerous. I'm not saying DJT isn't dangerous, but as a trading vehicle, if we can find things that are uncorrelated and volatile, I can make a lot of money on building portfolio strategies of a few of those kinds of things. And I think that's going to be one of them. So let's see if it fits into the portfolio. I don't know that it will. I wouldn't put my mom in it, but I might put my own spec account there. In part, of course. I am always an advocate of diversification, and no matter how much you like anything, there's bounds to how much you like it, and that's called a prudent portfolio weight. Okay, casinos. Hey, Trump owns casinos. I think he still likes the business. I'm guessing he has like a romantic kind of appeal to it. Some of these are also big campaign contributors. I think he wants them to succeed. Free speech, Main Street media competitors. All right. We know he's going to like Rumble. And Reddit's been on a tear since their IPO. I don't know if you know that, but great numbers, great performance. That's looking like a classic sort of Soros style virtuous cycle. Interesting play, and frankly, a free speech bastion there. Apple, in some circles has a great reputation for that. I'm not opining on that one way or the other, but I thought it warranted inclusion. Tim Cook was also at the inauguration. Okay, crypto. I don't think crypto is as obvious as the market thinks it is. I don't know if the crypto industry just wants to co-opt the Trump presidency, or if Trump's really on the train. I don't know, but I think there's probably been enough market action that we'll just let the market action sort it out for us. So we'll put a couple of ideas in. Coinbase, another big contributor, if I'm not mistaken. Then friends of the administration, right? Hell, I heard Elon Musk has his own office in the White House. Is that for real? I don't know. Again, in the same vein as wild speculation, being Trumpy, this is not Mary Trump's favorite cousin. This is Mary Jane, and these are marijuana stocks. I think we are going to progress on a path towards more legalization. That means more availability. That means more growth. I don't know about the fundamentals on any of these stocks, to be honest. I would want my prediction system to do that. All right, so look for the biotech stuff there. And by the way, once you get through the IPS, you'll make some other choices in here. You want to cook up your portfolio. Nothing you need a degree in finance or math for, just kind of basic stuff about what you like. Usually, if you don't know, you don't have to answer it. But at the end of the day, this is a investment policy statement. It's, for centuries been a great tool of smart and institutional investors. And the conclusion of that, you will get a portfolio that looks something like this. Okay, so this is the Trump portfolio. First things I like to look at on a portfolio, of course, let's look at the time period here. So this is basically the time span since the election to today. And you can see the Trump portfolio it's up more than 10% against the S&P 500, which is the biggest benchmark for stock portfolios. So that's a pretty good indicator. The next things I want to look for, well, this is great, right? So this tells us a little bit of a beta. No surprise there, given what we're holding. A little low on the R squared, a little bit surprising there, but I guess it's not really meant to look like the market. I mean, this is a beautiful up capture, down capture ratio. Big chubby alpha. Let's zoom out on this strategy and see if it holds together over a longer period. Okay, so let's see. Yeah, interesting. It looks like you can see sort of two waves in it here. There's this sort of wave here where, Trump was kind of emerging as the candidate. I think I'm being fair about that. And then this is sort of the summer where we didn't know what was going to happen. Was he get shot at right around, what was that, probably September? Gets shot at right around there. Yeah, and it's kind of been off to the races since about then. Let's go back a little bit further. Okay. Yeah. So when things hit the fan in COVID, this strategy was indeed a bit riskier than the market, at least the way it was cooked up here. And by the way this is cooked up, this is a dynamic strategy. It's not buy and hold. What's happening here is we are reoptimizing this portfolio based on a policy that we set for it. A lot of times we do that kind of around a 1 year mark for both tax and predictive efficacy reasons. So the portfolio that I have down here, and I'll show you the weights and what it likes and whatnot. That's, by the way, a fresh portfolio that's just, that we just came up with that. And then we went back and we built this based on what we would have done, based on the data that would have been available at that time. So there's no look back bias in any of the processes or policies. All right. Oh, and we're all about diversification here, right? So look at these weights. There's nothing coming back more than, I don't know, 6%. Is that the biggest I see? I probably had a maximum on here. You can see what it was, but here, let's get into the table. So yeah, our biggest position was a marijuana stock. Look at that. And then Walmart. So so we picked up some DJT, and I did try to specifically put kind of a momentum tuner into this that was tied a little bit more weighted than I would normally do to this period since the inauguration to now, because the data that's accrued in that time span should be extra predictive. Like if I'm building this, for myself, this is what I do. All right. So you can see we had 69 ideas in there. We don't have to invest in all of them. The system tells us to only invest in these 36. So invest in Tilray brands, but not Google. How do you like that? This thing I invented called diversification optimization, and that's the math inside diversification optimization is basically the same math inside this 3D polar chart. So collectively as a whole here, it tells us how balanced we are, and then it tells us how much to invest in any one thing based on how much it contributes to volumizing the whole portfolio strategy. So, hey, we're talking about America here, made in America, volume equals money. Bigger is better, and the more any one of these dots, and those dots are our stocks, the more any one of those dots helps to increase the portfolio, especially increase it in a new direction that's different and unique from the other things inside the portfolio, then it's going to help command more volume and more allocation and help put your portfolio in a more optimal sense of balance. And it's really the perfect portfolio visualization that explains not just the sum of the whole and how diversified we are, how covered is our opportunity set. In this case, we're not like fully covered, but it's an all equity portfolio. We can throw some commodities or some bonds in there or some other maybe strategies, but for an all equity portfolio, I'm feeling pretty good about this. It basically has the diversification that I would expect for any kind of broad index. And I think because of that, it might be worthy of a core kind of strategy that you could dress around over the next year or 2 or 3, maybe even 4. Probably more like 2 or 3. If you just buy this thing from whatever the click flow is afterwards, expect to hold it for like 2 or 3 years and then just, we'll do something different. But before we get into that, let's continue to check this out. So even on a 5-year span, we're beating benchmark. This is an annual return, net fees. The alpha's not what it was, but it's still a positive alpha and bigger than the fees. So that rules out 95% of investment managers right there. Diversification, we're in the green, like way into the green. So we're good there. Diversification percent, very strong. That's a big, oh my God, look at this. An estimated diversification alpha of 21%. Wow. And the reason that's happening, you don't get this if you buy and hold. It's the rebalancing and the reoptimizations that unlock this. In fact, there's 26% to be had by this process. And we're doing a pretty good job of getting it because we're rebalancing, I think, monthly, and we're reoptimizing. I'll be able to see that in the chart here. We're reoptimizing, let's see, there's one in 2020. Yeah, it looks like about every year. So, a yearly reoptimization. So the portfolio is really dynamic and evolving and evolutionary. The predictions that feed into it are also evolutionary. AI and diversification are good friends, at least when it comes to your money. The holdings here, I'll put a link in the probably comments or something. And then yours, you could use the same optimization settings we used here. A registered investment advisor, and is strong. By the way, should give you a sense of comfort. Investment advisor, gives you a lot of things, with people kind of more in the crypto space are missing, and they need it. Hot colors mean high correlations. These are cool colors. They're low correlations. Anyway, this is a Trump portfolio construction total strategy that I think you can put money on. I think this is okay. It's basically just tracking the market here on like a 5-year basis, but what really matters is, let's go maybe like a trailing 1 year. I think there's a real opportunity to beat the market with Trump stocks in 2025 using this or something like it. You can steal my ideas. This whole system, by the way, you can get an account for free. You could do all this and trade it yourself wherever to do it for you. So the concern is if you do it yourself, you probably won't, and you'll be lazy and not disciplined, and you'll be missing out on a big chunk of these portfolio construction gains like this diversification alpha. And that's what we're in business for. We hope we can help you. If you found this interesting, please consider subscribing. Have a great 2025. Postscript. Literally while recording this, the Trump administration announced Project Stargate with a reported $500 billion in funding. That is an astronomically big number. We already have some AI themes, and I have added them to the Trump stock list. I will make a second version of the portfolio which has these stock ideas incorporated. This is great news because it basically ensures that the trend has legs in the Trump administration, again making past data likely more predictive.